This is a US 30, which was obviously, as you can see, was great to say the least. It's a pretty huge trade that went on for a few days in the last week or so, uh, and generated really good upside. But that has pretty pretty much subsided, and we are in a mm, cross period of price action, which is not all that great for trading, as per se. And the future is kind of, as I know we have said multiple times, that the future does not get exhausted or something like that, things like that. But four is a high level, and if because we are seeing that this convergence of the price, that makes us a little bit more worried uh, of a crossover. And if that happens, and this becomes an open for downside. But for the moment, like I said last week, it's it's a good time to uh, be worry about price actions, and just try to catch the bounce. So that 800 mark I talked about last week, it's this low, that 800 mark, and that 35, as you saw, it got uh, rested at multiple times last week as well. So this is the zone, and whichever zone it comes out of, it's going to be the prevailing trend for next 7 or 10 days. It can still be downside, with the market being like really edgy again, recession forecast being in the talks. Uh, these mm, all these worries, and the Fed being the Fed, like keeping rates constant, and all that, it is going to be putting more and more pressure on the market as well, going through the next year, at least the first half. So that kind of forecast, and market being the market being where it is right now, it doesn't really like correlate very smoothly. And that could be one of the more one of the like significant reasons why we can see this a halt in this bull market as we speak. But yeah, it can still, because the market has also this the sentiment of a huge rally that went on the first 6 months of this year, as we saw. If that comes into play, if the rest of the market taps into that energy, we could still see the rallies continue, and that in that case the price could break out that 35 mark and just rally further and further upside. Mm, but for that, we need some sort of a cool down period, which I think this has been, and we can move on from now. So for Dow, we are not really forecasting anything, because it's going to depend on a lot of things, and because Dow is a smaller select bunch of stocks, which includes Microsoft, which is going through all that drama itself, on with Sam Altman and all the OpenAI board doing what they did, and so that can create pressure on the Microsoft side as well, and which being a $3 billion, like $2 billion stock, sorry, $2 trillion stock, will obviously exert some pressure on the market, because Apple and Microsoft like brings in pretty chunk on the US 30 as well. Uh, so apart from that, yeah, the, the price remains bullish, as we can see, and it will do so unless we see a breakdown on these areas. So this was being updated on real time, so that's why it was like that. But if we turn that off, you can see the price is pretty bullish still right now according to the future, and that market sentiment is going to play a lot of important, a big role in the price action going forward. So let's just change this to daily, because on the stock index it doesn't work very well. Change this to flow down. So as we can see on the, even on a daily Bollinger Band level, the price seems to be reached a point of exhaustion, and that level was reached at the same time our trade ended, or maybe a little bit before, on Wednesday or Thursday. So we can see that the pretty much all the indicators have lined up. So this here the crossover happened, this here crossover happened, this here the crossover happened after a deep exhaustion period. So all these things happened at the kind of same time, and mm, so this level becomes extra important right now for the price, where it will go from here. So if that is we break below that 800 mark, this resistance become an active resistance, and that could drive price back to that 34 200 mark, and give the price really the readjustments it needs for the further upside movement. And if it breaks above now, you could obviously target that 35 600 mark going forward. So that's pretty much the case for the US 30 at the moment, on this strategy. And apart from that, on the MA cross, it has been quite quite smooth for a long period. So as we can see, this this happened quite some time ago, like on November 2nd, uh, at the start of the month. It got triggered, and we have had a 6.5% upside inside the month. So that's a big month. But here too, we can see the exhaustions we were talking about. The price got exhausted last week on Thursday, and it has been on a rut since then. Not really finding any general direction of the trend, or as well. So what we could see is a correction to these remarks. If the that that like bearish sentiment comes into play, like 34 200 average, like I said, or we can just bounce off the 35, move up. In that case, these marks will be coming into play, 35 300, and then moving ahead at the top, which I said previously, on the previous chart, 35 600. So this is this is pretty much the next battle in the next remaining 40 days of the year. And generally, as I said also on the note, the last 2 months are generally seasonally bullish. So that gives a little bit of hope before we go into too much of a debate about the direction the markets could take going forward. Yeah, so that's US 30 for now.